Alright, what's going on, people? In today's video, I'm actually going to be talking about a concept that had a 95% chance of essentially playing out. I normally hate it when people come online and they come out with these ideas and they go, oh, my strategy has a 95% rate and all this crap, right? Normally, 99% of the time, they're just saying a load of crap, right? And I'm not even claiming my strategy has 95% success rate. I'm just claiming that the concept that I'm about to show you, that you can prove for yourself, right? And that's a common theme with the stuff that I show you guys. You can go ahead in these markets and test these concepts, these ideas for yourself. That's the best part of it, right? But basically, I'm going to show you something that has a very high percentage chance of occurring, okay? And it's so simple, you'll laugh at how simple it is. But I'm going to show you how you can intertwine it with daily bias to actually get a very, very, very high confidence idea. And then I'm actually going to go ahead and show you an example of it didn't working out, right? Which sounds crazy, right? Considering the fact that this has such a high percentage chance of playing out. I'm going to show you an example of price yesterday, an idea that I called prior that didn't play out, but had this concept in it. And the reason I'm going to do that is because it's relevant. And to be fair, it's quite hard to show this without sort of showing it live, because you'll see in a minute why. But pretty much, right? If you go ahead, okay, and look at the last, and you can change whatever sample size you do, right? Let's say you do 100 candles, 200 candles, 300 candles, up to you. Go ahead in price and look at the last 100 candles and see if it has both an upper wick and a lower wick, right? Sounds super simple, and it simply is that, okay? So what you'll eventually come to the conclusion, right, is there's a very small amount of candles, okay, that don't have basically an upper or a lower wick. Let's just say singular, right? So realistically, both candles, I personally haven't seen a candle with both no upper and lower wick, right? So we're disregarding that completely. But basically, you want to have a look at the percentage of candles, right, that don't have either an upper or a lower wick, right? And what you'll come to the conclusion is that literally majority of candles will have an upper and lower wick, and maybe a very small percentage, 3% will have that don't have a wick, okay, above and below the candle. Now you're probably thinking, how on earth does this help me in any way, shape, or form, right? Why is having an upper or lower wick on a candle even relevant? Okay, so the way you want to use this, right, is, let's say we have a bias, right? Let's say price is moving lower. Okay, let's say this is the daily chart. Let's say we're in a trend, price is moving lower. We form an FEG, okay, and my bias going into tomorrow is that I want to see the candle start, right, just how we would in a general power of 3 idea, start by going higher, expanding lower, and finishing the candle off like this. Okay, so essentially a power of 3 into this FEG, right? So if we see a candle open, right, and immediately go higher like this, okay, and let's put a green candle here. So let's say, for example, we retrace, we go higher, and at the point of entry, and if you think about this, right, the best time to enter in a short, right, on a daily candle, if you're playing a power 3 on a daily candle, is when the candle looks bullish and you're entering inside of the upper wick, right? So let's imagine we're bearish bias. This is daily FEG. The daily candle has started off by retracing up into a daily FEG. Perfect. Now the fact that this candle doesn't have a lower wick, right? And I have to stress this, and you have a bearish bias, right? You do not want to use this if you do not have a bias. You need to have a bias, right? So if I am bearish, we tap into a higher time frame PD rate, and I'm anticipating this following candle to be bearish, essentially there's a 95% chance that this candle is going to roll over and get back down to this low, making this wick. Why is that? Because we know that out of, let's say, 100 candles that you test, right, that only 5 of them have no lower wick or no upper wick. in this example. In this example, it'll be no lower wick. So the fact that it doesn't have a no lower wick means that we have an incredibly high percentage chance of us actually trending lower and taking out this low and creating, okay, the lower wick of the candle. That is the concept, simply put, right? I know a lot of the time, and I used to have this where you expect all the technicals to be sort of crazy hard to understand. You would see, right, throughout all the sort of data that I give, based on all the sort of videos that I create, that a lot of the concepts I give that have these really high probabilities, they're very simple concepts, right? So let me just show you an example of how I did this. So in my Discord, right, I called this trade idea yesterday. Okay, you can pause and click on this, right? But this is basically the candle. We're going to be looking at this following euro candle, right? This is where I mention essentially the idea of a no wick, which again, funnily enough, in this example doesn't play out. But the reason, and I think this you'll get this right, why it's very hard to show you this live, is because what I'd have to do is go through each and every candle and figure out which one doesn't create a low wick, and then which one essentially creates the low wick after price moved higher, if that makes sense. If it doesn't make sense, don't worry about it. But anyway, in this thesis of this trade, right, we entered this H4 BISI, very similar to the picture I drew to you. We had no lower wick on this daily candle, and it was a candle that I anticipated to be bearish. Now, yes, I got the bias wrong. That's completely normal in this specific idea, because we didn't end up closing bearish, which is fine. But pretty much what I wrote here was, we have Wednesday low of week, right? We know there's an 84% chance that the low of the week will be Thursday/Friday, which is a stat that I've given in a prior video. There's a 95% chance that the daily candle will have a lower wick, right? Notice we don't have one, right? Don't have one right now. So this idea is super high probability, right? So let me just show you this. So it was essentially this. After we'd formed this bearish candle, I wanted to see this candle right here, Thursday's candle, print lower. Just to give you the thesis, we had swept a ton of liquidity up here. We have this FEG here. We know price likes to gravitate towards liquidity or fair value. This is the fair value I wanted to see price gravitate towards. On the daily, we had shifted. We had a change in state of delivery beneath this candle here. And we had formed a high here, right? Swing point, a nice aggressive candle to the downside. And I just wanted to see Thursday go ahead and run lower, right? So like I said, we had the idea that we have Monday high of week, Wednesday low of week, and we know Thursday, Friday has a very high chance of being low of the week, as I've mentioned in a prior video. So, sorry, let me just replay here. There we go. So essentially, I was looking to be bearish on this candle. Now, yes, it closed bullish. Also, this is a good, I guess, learning lesson in the fact of, like, look, you're going to have biases, they're going to have really high probability, and sometimes they're not going to play out, right? And I actually executed on this trade as well. So this is just sort of that understanding of, you're playing a game of probabilities. Nothing is certain, but we can reinforce our biases with very high probability statistics, okay? So as you can see, right, this candle has no lower wick. Sometimes, right, it's going to look, maybe it does have one, or maybe it doesn't. The easiest way to know with 100% accuracy that it does is basically just hover over the candle, and you're going to see these numbers appear here. Okay, so open, high, low, close. Essentially, if you hover over that candle, it gives you, to that top left, the open, high, low, close. As you can see here, right, the open, right, the O, and the number next to the L is the same. So 1.13133 next to the O, next to the L, 1.3133. Okay, so what that essentially means is the open price and the low of the candle is the exact same price, meaning this candle doesn't have a lower wick 100%, and you want to verify it with that, because sometimes it will have like literally to the smallest pip or tick a lower wick, right, which basically invalidates this. A lot of the time as well, you'll notice this doesn't play out that much. Like you won't see this idea come about too much. So when it does, you want to have a lot of conviction in the idea. So essentially, I want to see this low get run out, and I was highlighting the fact that there was no wick underneath this candle. Okay, so we had the daily FEG, We go down, we go lower now, and simply put, we put a high in. Clearly bearish order flow is intact, right? The day prior, we respected this FEG. We formed this FEG plus order block, and we had equal lows. Yeah, so the idea is great. Yeah, in my opinion. Let me just. This is printing Friday's candle right now, but this is how we closed on Thursday, right? So price went ahead, retraced into this FEG, and I don't think I posted my screenshot of the trade. Maybe I'll edit it in potentially. I might have uploaded to Telegram. I can't remember right now. But I'm not gonna fake a loss anyway. I know people worry about those screenshots and stuff, but like I'm telling you, I took a reduced loss here anyway. So we retraced into the 4-hour FEG. We also have this hourly FEG here, right? So we have a ton of different confluences, and we also have the daily order block. So like I said, right, if I just put on this indicator here, we have no lower wick. We know there's a 95% chance that we're going to go ahead and trade the lower wick. We also paired that with the other statistic about low of week being Thursday and Friday. So we've retraced here. What I like to see is some sort of swing point come through before I enter, personally, right? If I'm not entering off sort of just a higher time frame level. A lot of time what I'll do is I'll build a position. So essentially, you can enter on the front side or the back end of the trade. So front side would sort of be like as price is running higher. The back end of the trade is sort of when price is moving in your direction. Backside is my preferred, but sometimes, for example, if you're just playing, let's say this whole FEG, and you just want to start building a position, and you believe, let's say it's going to wick there and drop, then you can build a position there if you'd like. But anyways, we go higher, all good. We come into London, no trades from me in London. We move higher, and now you can see how this bearish candle goes ahead, wicks out 2 candles, and then closes bearish. This is when I'm starting to think, okay, cool, we could be, or this could be high of the day, and we might end up melting from here. That was basically my thought process. So I allowed for the swing point to form, right, which is basically where we have a candle with a wick to the left and to the right, and the right candle closes, or it doesn't have to close, but trades at least below the middle candle's wick, which we do have here. So if I just show you this is what I mean by the swing point. If we then go on the 15-minute, okay, obviously the cycle to me is quite important. This is an early MY reversal cycle. This is when the high of the day gets made outside of session. So I've thought, cool, fine. This lines up with my cycle. We still have a ton of lows here. Asia low, all low resistance liquidity. And like I said, we have a 95% chance, right, that this low is going to get traded for, right? Specifically in a day where I'm looking to be bearish. As I said, do not use this if you don't have a bias, right? Even though it has an incredibly high percentage chance of playing out, I wouldn't use this without a bias. I think it's ridiculous. So, the other thing I will say actually is you can use this for hourly candles as well. You can do this on 15-minute candles. You can do it on any candle really. So for example, if I thought, let's say the next hourly candle was going to be bearish and we just rip higher, right? Any entry here I know is fairly likely, at least for price, to get back to this level here. So you could be super aggressive. Let's say the hourly pushes up, you enter inside this level, we get here, you break even, and then at that point you let sort of price play out. Yeah, so here we had a 15-minute breaker, right? Again, nothing fancy here, very basic setup, nice market structure shift. I entered on the hourly closure, we tagged the breaker, and we start running lower. Okay, and I'm like, cool, this is nice. I reduce risk a little bit, and then anyway we end up retracing a bit higher. When this swing point forms, I'm like, cool, I have statistics for swing points as well. I know that the previous candle's low of the third candle has a very high percentage chance of getting reached for, so I was like, cool. I ended up moving my SL lower, reducing the risk of the position around to about half an R. So I'm basically at I'm in this trade, and I'm close to about minus 0.5 R if I take a loss here, right? So I've effectively reduced my risk on a trade, right? And you'll get a feel for like when you need to do this. It's very personal. It's very sort of like a personal preference style thing, and it's something you get used to. But I mentioned this in the Telegram recently that you really want to again understand how to milk your winners and limit your losses. And again, this is sort of how I do this. So anyway, ends up wicking me out. I'm like, cool, is what it is. We end up running lower. Okay, so again, in my journal, I will evaluate, cool, did I reduce my risk too early? Was this idea wrong, right? Should I have not reduced my risk? Okay, these are the sort of questions you want to ask yourself, and I asked myself in my journal, okay? So anyway, the final outcome of this idea is that we didn't run anyway, okay? So if I just get rid of replay now, and you'll see what happened the following day. So we stayed within the hourly FEG, and we did run. This wasn't the high. Now we're in a different daily candle. So, I mean, it's not really that relevant. But the point I'm trying to get at here, right, is that I had an idea that was super high probability. We had no wick. I wanted to see a bearish candle, and the bias didn't play out, right? Do you know what's so funny is because I feel like when people are making these YouTube videos and supporting their concepts, obviously they're going to show ideas that work. And I'm showing you one that didn't. But like I said, this is the power of going through the charts and you being able to test this idea for yourself. So that's basically just a bit of a summary of a trade that I attempted to manage using these concepts and it not playing out, which again is the reality of this game. Anyone who tells you that they're winning 24/7 is pretty much just a liar at the end of the day. But basically, I just wanted to show you like how I formed an idea using this sort of this concept, regardless of whether it played out or not. Doesn't really matter. It's more just me showing you like, cool, look, this is what happened. This is what I was expecting. This is what the outcome was. Right? Very choppy price action, to be fair. Another way you sort of can use this, I've just seen it being used, is people sort of say this is an inefficiency that should get traded to. I don't know if I really resonate with that information, but again, if you want to test that, you can. But yeah, to actually test this idea out, literally just go through 100 candles or however many you want to go through and just count. Let's just say we're starting from this, so I'll say 1, 2, and every time it has an upper or lower wick, I'll count that as, okay, fine. That's part of sort of the candles that do have an upper and lower wick. And essentially, I will just count specifically the ones that don't have an upper and lower wick. So let's just say I'll do it from here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22. You get the point, right? And eventually, you'll find a candle, okay, that doesn't have an upper or lower wick. Okay, I'm skimming here. I've probably missed it. I actually did this on DXY, and I think I remember there's one close. There you go. Right, so this one, okay. So let's say we counted back from here. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, on the 10th candle, we have a candle here. We'll double check it with the open, high, low, close. So length of April, the open and the high. Okay, the same number, 100.784. Okay. So then, again, I'll keep counting to 100, and I'll count how many didn't have an upper or lower wick, and there you go, that's your percentage. So overall, hopefully you guys enjoyed this, and if you do have any further questions, feel free to ask me. Just for the daily bias part, I'll drop a resource in the description. It's basically my 3-step daily bias framework is for free. You can go ahead and download it. And hopefully that will help you with your bias, right? Using that in conjunction with this no wick idea. Yeah, so hopefully you guys enjoy this, and I'll see you on the next one.